I think Barrick Gold is a very strong buy today in 2024. So in this video, I'm going to give you 7 reasons why it's such a good value today. But after that, I'm actually going to share 7 risks with you, because if you don't know enough about a company to know several things that could go wrong with that company, well, then you don't know enough to invest in that company. So let's get right into it. By the way, don't take any of this as investment advice. These are just my opinions based on my analysis, and always do lots of your own research before investing any of your hard-earned money. Number one is that on just about every metric that you could possibly measure, Barrick is super cheap today compared to where it's been in the past. For example, the price to cash flow ratio is way below its average, and the price to the net asset value of the company is the lowest it's ever been, but for one single quarter in 2015. It's trading at about 0.65 times NAV. The sentiment in the entirety of the gold sector right now is awful, which is good news for you, the investor who has money to invest, because that means you can find lots of great values. And Barrick Gold is perhaps the very best value of the majors. Reason number 2 are Barrick's best-in-class assets. Of the 10 best gold mines in the world, Barrick owns 6 of them. 6 of the 10 best, which is crazy. That's way better than any other major out there. And speaking of assets, the reason number 3 is that Barrick has the best growth pipeline of any of the majors. Well, no, of any gold company at all. They are set to grow a lot without having to buy anything else or make any acquisitions over the coming remainder of the decade. For example, you have the Reko Diq project in Pakistan, which is absolutely enormous. They have something like 50 billion pounds of copper and 40 million ounces of gold there in that project. And then you have the huge Lumwana expansion as well. But in addition to those 2 growth projects, one project you almost never hear analysts talking about when talking about Barrick is their Donlin project in Africa. No, is their Donlin project in Alaska. This Donlin project, which Barrick owns 50% of, is one of the biggest, well, will be one of the biggest gold mines in the world. So far, they've found about 40 million ounces, but there's probably 80 to 100 million ounces of gold there. And when they get into production, that mine should be producing about 1 million ounces a year. So you have a 1 million ounce a year mine, of which Barrick owns 50%, and it doesn't even get talked about at all because their assets are so great and their growth pipeline outside of the Donlin project is so massive. Another reason why Barrick is a strong buy is they have a very strong balance sheet and they have 0 net debt, which for an industry that is so capital intensive, it is actually pretty rare to have 0 net debt. But Barrick and a lot of other producers, in fairness, have no debt at all. And on that point, they're generating cash like crazy. This is a cash flow machine, which has allowed them to pay down their debt, but that also allows them to pay a nice dividend and invest in growth projects to continue growing the business. Reason number 5 to buy Barrick is that their assets are so good that they keep more than replacing reserves. So their reserves, despite mining like 4 million ounces a year, their reserves are actually growing because they keep finding more than they're mining. So when you have such good assets like Barrick does, that often allows you to do something like that if you spend sufficient money exploring those assets. And because of all this exploration success and having such good assets, it allows them to grow organically without having to go out and make acquisitions. Of course, every mine will eventually deplete. Over time, you will run out of stuff to mine. However, a lot of Barrick's assets have reserves and resources that will allow the mines to operate for many decades into the future. The 6th reason Barrick is a strong buy in 2024 is that they have the best of the best management. Mark Bristow is arguably the best CEO in the entire industry. Since taking over Barrick, he has solved a lot of problems that previous managers haven't been able to solve. For example, he was able to combine the Nevada assets of Barrick, the Nevada assets of Newmont, take them over, have Barrick operate them, and save a bunch of money in synergies and like save in ore routing costs and all sorts of stuff because there was double money being spent there, and they were operating those mines, Newmont and Barrick were, for many, many years before Mark Bristow took over the company. But then within like a year of taking over the company, he was able to consolidate that into one company, Nevada Gold Mines, which is operated and owned more than 60% by Barrick. And in addition to that, he's been able to work with communities in very difficult to operate places and work with governments in those places to get mines reopened, to keep them running, to negotiate difficult tax related things, and lots of problems that come up in these developing countries. Well, Mark Bristow has been able to take care of it almost every single time. So I'm going to share with you the seventh reason in a moment, but after that, I'm going to share with you 7 risks that come with buying Barrick. Overall, I think Barrick is a really strong buy, and I think these positives far outweigh the negatives. However, there are still risks associated with buying this stock. A lot of gold investors have been disappointed with the gold price, like they expected more out of it. But the truth is, and this is reason number 7 why to buy Barrick, is that at these gold and copper prices, by the way, they do have copper exposure as well. At these gold and copper prices, they have huge margins. They're making like $600-700 an ounce for every single ounce that they mined, which is actually really good. And that's much, much better than it's been for most of the history of the company. The first risk with Barrick is their political risk. Something about Mark Bristow is he goes where the biggest and best mines are, regardless of the political climate. He's able to work with the governments, work with the local communities to get these mines built and continue operating and getting them reopened if they've been shut down, which has happened a few times. They have operations in places like Mali, Congo, Tanzania, Papua New Guinea, lots of places that a lot of people are scared to go, or as Rick Rule says, can't spell. So they definitely aren't operating in tier 1 political jurisdictions. However, you could make the argument that they're diversified because they're operating in so many different risky jurisdictions. The second risk is that they have significant exposure to copper, and in the coming years, they're going to have even more exposure to copper. Now, I actually think this is a very good thing because I'm very bullish on where the copper price is going to go into the future. However, if we get some sort of worldwide recession where economic activity is reduced, well, that's going to kill the copper price, which will hurt Barrick temporarily. But you could see a significant decline in Barrick's stock price should we see something like that. The third risk with Barrick is that they've missed their production guidance for 3 years in a row. That's something you never like to see. Now, I think they're going to be able to change that, and I think in 2024, they're going to be heading in the right direction again. And that's sort of related to the next risk, and that is since 2007, for the last 16 years, Barrick's production has been pretty steadily declining year after year. It just goes to show how hard it is to maintain this level of production when you have this big of a company. So in 2007, they were producing something like 8 million ounces a year. Now they're producing 4 million ounces a year. In fairness, they've sold some assets along the way, but still, I mean, that's kind of scary to see when you see 16 years basically. Like there's been some ups and some downs, but overall it's a pretty steady downtrend with production decreasing over the years. Now, I think we're going to go into a phase where Barrick's going to be increasing production by quite a bit, looking at their upcoming pipeline and what they're going to be building and what they're going to be expanding and all that. So I think that trend is about to reverse. So that could be a good reason why the stock is so cheap right now. However, it is still a risk. When you see 16 years of declining production, it's like, oh, who wants to jump in front of that freight train? The next risk for Barrick is related to the company First Quantum. So First Quantum is a copper miner, and they have a huge asset in Panama called the Cobre Panama copper mine. That recently got shut down by the Panamanian government. Barrick is trying to acquire First Quantum. While the stock price of First Quantum is way depressed, they want to acquire First Quantum to get their copper assets, because something Mark Bristow, the CEO of Barrick, is trying to do, he's trying to build a gigantic copper and gold company. Well, if Barrick does acquire First Quantum and is successful in that, well, initially, Barrick stock price is probably going to go down on that acquisition. Now, I think it's going to be very good for Barrick in the long run if they're able to acquire that company. However, it could temporarily reduce the stock price. Another risk with Barrick is the risk of nationalization. Given the political climates that they operate in, there's a lot of these developing country governments that occasionally try to nationalize assets. Now, sometimes these governments outright nationalize the mines, but then other times they do it in a way where they don't call it nationalization. But for example, there's a permit coming up that's set to be renewed, and it's just a formality if you've followed all the environmental guidelines and everything. However, then that comes time to renew it, and then they don't renew it. So by the fact that they don't renew a permit, for example, well, then they're effectively nationalizing the mine. This happened to Barrick in Papua New Guinea with their Porgera mine a few years back. And then it took Mark Bristow and Barrick a while to negotiate with the government, and they ended up having to give a bigger share of the mine to the government. And you know what? That could happen with some of their other mines as well. And the seventh risk for Barrick that I have for you is that their costs have risen a lot over the past 5 years. Their all-in sustaining costs have gone from about $800 an ounce to about $1,300 an ounce just in a matter of 5 years. And if we continue seeing these massive cost increases like we've seen over these past 5 years, well then that could cut into Barrick's profit margins a lot, especially if the gold and copper prices don't continue climbing. But despite all these risks, I think Barrick is still a very strong buy, and you cannot go wrong at this kind of valuation. If you like videos like this, please subscribe to the channel and next watch this playlist that's going to make you a better mining stock investor.